When the stock market falls and inflation accelerates, many investors turn to alternative assets. You can really save and grow your money while others stare helplessly at red stock price charts. P2P lending is a fixed income asset with good liquidity and a low entry threshold. But what about risks? Watch our video to find out what are the risks in P2P and how to mitigate them. Hi, this is Robocash investment platform, and we're happy to welcome you on our channel. P2P loans can be a great asset in your portfolio both at the quiet time and when the traditional asset market is in crisis. If you don't know how P2P loans work, you can watch our video about it. We'll drop the link in the top right corner of the screen. Now, in short, P2P investment is a scheme where you lend money to people using a special platform and then get it back with some extra interest after a certain period of time. This model has some risks that we're going to talk about today. Risk number 1. The borrower doesn't return the money. Lending companies that get funding through the P2P platforms want to ensure that they'll get the money from the borrower on many levels. Still, some borrowers pay back late or don't return the money at all. To tackle this risk, most P2P platforms in Europe offer a buyback guarantee. This is a protective mechanism where the loan originator is obliged to return the money to investors even though the borrower hasn't paid back yet. The guarantee can cover not only the principal, the money that you initially invested, but also the interest you're supposed to earn. Normally, the buyback period lasts about 30 to 60 days. You can find this information on the platform's website. Even with the buyback guarantee, the risk of loan default for investors remains in case the lending company cannot fulfill its obligations. Risk number 2. The lending company defaults. When a lending company defaults, it refuses to pay back what it owes its investors. In most cases, the default can be predicted when the business is performing poorly. All platforms can be roughly divided into two large groups: marketplaces and those that work within their own holding. Marketplaces give you more diversification, and the affiliated P2P platforms normally have a higher degree of protection against the risk of a creditor's default. When a platform works only with its own lending companies, it knows for sure when one of the holding's businesses is doing badly and can take actions in advance to protect investors. When it comes to marketplaces, the lending companies can sometimes hide their poor performance, so when the platform knows something's wrong, it can be too late. Marketplaces try to improve their protective mechanisms to avoid such situations. So, how do you tackle this risk? Do your due diligence and check the platform structure, the financial reports of the lender or the holding you want to invest in, and of course, diversify. Risk number 3. The platform is a fraud. P2P lending is a relatively young asset, so the legislation in the sphere is not as developed as for other more established tools. This gives space for scams. Some websites pretend to work as a P2P platform, but in fact, they do not. The schemes can involve fake loans, pyramid schemes when old investors get money from new users, or straight fakes that are intended to get your bank account info. However, such schemes are easy to recognize if you keep an eye out for them. Here are some red flags to be aware of. There is little information about the platform on the internet and in the community, such as thematic websites, blogs, and so on. Reviews on the internet talk about non-payment or payment delays. There is little transparency on the website and communication is scarce. For example, you can't see how the platform works, what companies place loans there, and what news it has at all. There is no indication of a registered legal entity or it is registered in a barn in the backyard of an Estonian village. This is a joke, of course, but it won't harm to check it by simply Googling the legal address. Have you ever encountered a scam? Tell us about your experience in the comments. It is important to understand that the P2P market in Europe is still on the way to being regulated. P2P lending, like any other asset, has risks, and the best thing you can do to mitigate them is to diversify your portfolio. In a turbulent economic environment, P2P can become a good instrument with high and predictable returns and good liquidity. Are you ready to try? Find the link to Robocash in the description and start your journey today. Thank you for watching this video, subscribe to our channel and make an informed decision about investing.